Hello, everyone. How we doing today? Can you guys hear me? Can you see my screen? Give me a quick little message. Awesome. Awesome. Hell of a day. I expected way worse price action than what we actually got. So it's going to be very fun to review this today. We'll start very simply by just reviewing what we expected from our outlook, right? Let's be honest. What the fuck happened Monday? Okay. At least that's my personal I guess opinion on the matter, thought process. Because as I tell you guys, I don't really focus on the outliers. So some people might go ahead and show you some random stuff like here. I'm gonna use this old order block and this unmitigated order block to find an area of value, and then that's why it went down there, right? This is absolute bullshit. Please don't read into this. I'm just saying a lot of people have a plenty of different ways to look at the markets, and I just take away the fuss. All right. That's why you'll always see me using the same exact logic to justify my trades. It's because I use the same system every single day. And no, my system doesn't predict the 4.63% down day on a random Monday. Definitely not. And especially doesn't predict, well, I guess statistics could have told you that we were due for a large range gap on the last week of January, by the way. But it's just not something you need to prepare for because it's an outlier. It doesn't happen often. So do I need to be prepared for that scenario? No, I just need to implement rules that make sure that that scenario doesn't destroy me. For myself, I wasn't trading Monday, but what does that bring us to on the next day? Well, after a large range day to the downside, I expect a retracement to the upside. Additional confluence, huge new week opening gap. That is going to be my draw for the rest of the week. That's all I'm going to be looking for. I want us to return to that gap. I want us to fill it. This is going to be a huge draw. But another additional confluence is our first discount and efficiency. Now, you see it trade all the way down here. Did it respect this order block? No. That is the truth, right? Because if it respected this order block, I'm looking for this level or this level to create a reaction. It did not. It went all the way down there. But seeing that close gives you an indication into the next day. Even though we did not basically respect this order block, right? We clearly expanded through it. We closed above its mean threshold. And you can see the values here. I'm always looking at the OHLC values that I always have on my chart for precision, right? And I see that the close of this candle is 21,304.5, and that my mean threshold is 21,301.75. So clearly, we closed above the mean threshold. Now, this gives me additional confluence going into the next day. I was looking for bullish price action. I'm going to leave these levels on the chart. Now, if I'm looking for bullish price action, in terms of a day's price action, right? And I'll go in replay mode here, just because I like having the indicator on the same normal settings of just, by the way, guys, historical sessions, 0, so that I can only see the current days, but it shows me the AM levels. This is what I like. Looking at this, right? What am I going to look for in terms of power of 3? And I'm actually going to remove these because they're going to be in our way a lot. But as you can see clearly, order block level and mean threshold were very important levels, with price gravitating and returning to these levels constantly. So clearly higher time frame point of interest was important in this case. But looking at my 15-minute chart, and let me actually remove this news line so we can see better. I'm always thinking power of 3, right? Because that's how my daily candle forms. So if I want to be only trading distribution, only trading expansion towards my target, my drawn liquidity, then I want to make sure that there is a clear manipulation. Now, as I always tell you guys, I look for SMT, right? So I look for clear rate on liquidity, which is confirmed to me that it is indeed my manipulation of the day because there's SMT. But if we look here, there was no SMT. Could have been in the 1 minute here, right? I'm not going to go down and check if there was SMT on the 1 minute there. Truth is, When I opened my charts and was looking to trade, there was no SMT at this low. So for me, that was not necessarily a high probability. But when I look at the day, what did we have? We had accumulation followed by a short-term manipulation to bring this move lower. So we had to go lower first, which is why we went higher here. And after this level got taken out, we were now ready to distribute to the upside. This is the move that I want to be catching. Now with our higher time frame charts, clearly, in my opinion at least, you should have been bullish for the day. All right, why? Because after such a large range, I anticipate a retracement to the upside. That's the truth. But we're also going to consider the people who are looking for continuations. So as I said, for myself, you should have been bullish today. But if you were bearish, we're also going to look at the setups, because the truth is you can trade the Rise model without bias and be profitable. And yes, this has been tested. I'm not pulling this out of my ass. There's data behind it, and I can't wait to share that data with you guys through Rise Statistics. It's such a big project, but it's all coming along very nicely. But as we said, no SMT here. Does that mean no trade? No, but it does mean no trading before my news, right? Because the only time I will be trading before my news, which today we had 10 a.m., I believe it was consumer confidence, CB something, right? I just know them from their names on Forex Factory pretty much. But we had 10 a.m. high impact news. And if I want to be trading before that news, I need SMT to be present with a clear 930 open Judah swing. At 930, we expanded lower. We had a clear Judah swing. We just didn't have that SMT to confirm. Seems like a trend, right? There was a trade last week where I wanted to go short, but there was no SMT. So maybe less SMT now with higher participation in the markets. I guess we'll have to see about that. But I'm not changing my rules. I trust my model. Now looking at this, as we said, 930, clearly Judah swing lower. This is what we frame as our time-based manipulation, right? The start of the New York session, equities open at 930. We are looking for fake move. We got that fake move, taking out our important level. What is this important level? Current low of day. You want to call it Asian session lows. Call it what you want. I like to keep things simple so that I don't look at Asian session low. So I'm not going to call it Asian session low. What is this? This is the current low of the day. That is why I am utilizing it, why I believe this is more important liquidity. So that's how I'm going to use it. We took out this level. Higher time frame point of interest were also within our order block. These are key areas to buy, looking for a retracement higher. But if we had 1,000 handle move down, a retracement higher could be 500 handles, 600 handles. So you have a high probability framework there. Now, as I stated, I would have waited for news here, because we didn't have SMT. And yes, that means that if you look, right, if you're looking purely for unicorn, you have a beautiful unicorn here with a clear 3 PD array stop loss right there. And truth is, even at the news, you were already up almost 1R. But that's not how I personally trade. I need my confirmations to be present because I know that's how my model performs. I know that if there's this, and this, that's my win rate. That's what I should return. And so every time I click the button and all of these things are present, and I'm talking about my model's rules, of course, I have positive, not possible, I have positive expected value, EV. That is a term used a lot in poker. But what does it mean? It means that when I click the button, when I'm putting money at risk, I have positive expected value to be returned to me. And if I follow my rules, I know that's how it is. That's why it's so easy for me to follow my rules. It's because I know that's how I make money. And once you actually accept that is when you're going to be profitable, guys. That's the truth. You just got to accept that following your rules, making money, is not about reading the markets. It's about following a clear system. But enough rambling about that psychology stuff, right? Clearly, this was not an entry for me because there was no SMT at these lows. Otherwise, it was picture perfect, right? Everything aligned beautifully. And you had a clear target also, which I did forget to mention, at, once again, current high of day. This is not London high because this was formed just after London, but we basically had a London framework. The only difference is just after London's end, we kept going up for a little bit. So mechanically speaking, not a London framework. once again, current high of day. Now looking at this, can I still take a trade right after the news? Yes, 100%. Why couldn't I not? Right? I know this news will bring an injection of liquidity, which means that there will be a lot of juice for a move right afterwards. Now, the only thing that made it lack a little bit of confidence, in my opinion, is the SMT that we formed on these highs with 930 highs. So I understand that these are both important levels, and at the news release, we formed SMT, right? We can look just before, but it doesn't matter. It's still the same thing where NASDAQ has taken it out and ES has not, right? I just like to place my lines on pretty swing highs. That's the truth, right? So just on the first swing highs, you can clearly see the divergence. So what does this tell me? Well, if I'm going to be looking for long here, I need additional confirmation. So I need us to invalidate this SMT or to form another setup. If we look right here, and I'll use standard deviations to draw my breaker range, we have a beautiful breaker range that formed here that created a breaker block that we could use to enter. Let me try and use the correct template. There we go, breaker block. And at that point in time, we actually invalidated the SMT that we formed on the highs, which just grants you even better confluence. And if we look right here, first retracement into a fair value gap or inversion fair value gap that overlaps with my breaker. That is my unicorn entry. 3PD array stop loss tells me to place my stop technically at this low. Why? Because it's the low of the inversion fair value gap right here, right? So you have the fair value gap above, fair value gap below, inversion fair value gap. In cases like these, I'm placing it here at the low of this fair value gap. Why? Because it allows for price to trade into that inversion fair value gap as well. So that's just a way that I've found to optimize the 3PD array stop loss rule in this specific scenario. When I have a fair value gap and inversion fair value gap overlap, I use the closest one to my entry, because this is an area where I expect, well, basically price has a higher probability of holding. It's what we call a balanced price range if we want to go into the specifics right here. So it's kind of like if I counted it as an additional PD array. Now we'll be pessimistic for the sake of, well, these reviews, right? I don't like to always be optimistic of, oh, I would have seen that, I would have seen that. But personally, I did take the trade today and my stop was here. I like to tell you guys, even though like my students will tell you, when I tell them to backtest, I tell them choose the worst possible outcome. So if you're backtesting a setup, show me the worst target you could have had and the most brain dead entry for it, the obvious entry, because that's the one you're going to see in front of your charts. You don't want to backtest and say that you are basically, I know the system that is profitable, but truth is your backtests are just dreams in hindsight. So glad to see we both saw this. Did you see the short opportunity at the open? Yes, I was going to talk about it. I am going to talk about it as well just in a second, because as I said, bias was bullish. So I want to focus on what, in my opinion, was the right trade for my system today, right? For the Rise trading model. So we'll talk about this, but as I said, you should have been bullish in my opinion today. So I'm going to talk about this. But see, people have opinions. People use different logics. So that's why I like to cover both sides oftentimes. So we will look at the short at the open, which in my opinion was a great short. But I wanted us to look at this long first, pretty much. That simple. Now, speaking in terms of risk to reward, right? Current high of day in your reversal range, that is a beautiful opportunity to take profit. But the RR is too low. So what do I do in these cases? I have two options. Either I don't take the trade and I wait for price to retrace deeper. If it does, then I'll have a trade. For myself, it wasn't an issue because I had a tighter stop. But as I said, what is the other option? Well, okay, I won't take profit at this level, but I will remove my risk. So I'm taking this long. And once price hits what should be my take profit, which should be a partial objective for me, I am going to remove my risk. So place my stop break even. Let's just have this. I believe I actually have a template for that. Yes, there we go. So I would place my stop break even as soon as we hit this. And then where am I going to take profit? Well, a good one to say is 2R, right? When I'm up double the money, right? This is what we talked about yesterday. That's a clear objective. Now 2R aligns with 4 standard deviations. Truth is, I would see I'm up 2R, look for a take profit, and then half a second later, we took out 4 standard deviations, if you guys were watching this candle live, so that would be a clear objective. And after that, I'm already break even, and then I'm just holding a runner for the rest of the day. And as you guys see, pretty clear. For myself, I did get fully out here because I didn't want to be looking at my charts the whole PM session. And I wasn't feeling great because here, for example, I'll show you guys. I always like for lunch to be a retracement. Now we expanded in lunch, barely retraced in the premium of this range and then kept expanding. Oftentimes you'll see this pattern of prices contracting, right? I think that's the word for it. It's just becoming smaller and smaller ranges. This is the French person in me. I'm not sure if contracting is a word, but pretty much being pushed into a smaller and smaller place. That's what I'm trying to say. And then expands higher. Oftentimes while you see this as well, you'll see a deep retracement. And then you can still get your continuation. But I didn't want to see that deep retracement. So personally, once we took out this high, I just got fully out. It is a word. Okay. I'm not sure. I'm not born speaking the English language, by the way, guys. I've had the chance to learn it pretty young, which gave me a bunch of opportunities, clearly. But sometimes I get confused with words. Price action traders call it build up. Yeah, that sounds actually a lot better, but it is not very representative of the market mechanics behind it, which is not something we'll talk about because it is absolutely useless. It's purely speculative about how the markets work, but contracting is, I don't know, I'll look for a better word. But yes, let's just call it a build-up for now. And that's how I personally manage that trade, especially if you think about holding this trade. You took profits and then all of that consolidation, and then your stop is still at break even. Once you see price run once again, you're very happy to get out of this trade, because all during that time in my brain, what was going on is, okay, I had my partial, I'm going to get broken even. But that doesn't mean I'm going to close my trade here, right? I have my rules for a reason, and turns out this one was a win, so I just wanted to get out as a win and missed out on, what is it, right? I stopped right here. Best case scenario, missed out on 60 points and caught a total of 196 points. So quite happy with that result, right? As I stated, this is the best trade in my book, right? Looking at longs. But as Wolfe just said, can you trade the manipulation? Yes. Why not? It is still a move I can predict. Now, is it a lower probability move than trading my expansion? 100%. But if my bias was short today, in my brain, in my mind, right, my thought process was, this is going to be an expansion lower. And perhaps you had lower objectives, like, well, I was going to say relative equal lows. These aren't, but just previous day low, you were looking for overall continuation of the markets, right? Continuation of Monday's move. That is something that's justifiable. As I said, my opinion, it would be wrong using my specific logic, but we'll still look at it. Now, you don't have much thought process to do at this point in time, but there is still the same exact problem as the other one, and is that every SMT we form, we pretty much invalidated. So we had SMT here, for example, and we just invalidated it right at the open. So for me, I can never justify taking a trade like this because, first of all, there's no SMT and I'm trading against my bias. All of a sudden, there's not one thing missing or two things missing. But if I change my bias, then all of a sudden, the only thing missing is that there's no SMT. So then that would be a valuable trade. I'm sorry if I repeated myself a lot there, but I didn't want to make it clear in that sense, because I don't want that when people are coming back and are going to be listening to the recording of this and they say, oh, well, look, he doesn't trade with his bias. You know, he was trading short, he was trading long. The point I'm trying to make here is that no matter your bias, all you have to do is follow your rules. But enough psychology, as I said. I'm feeling special today. Been ranting this whole time. You have a clear bearish breaker block. right? If we use, once again, our standard deviations just to display these levels, aligns beautifully with current low of day for standard deviations. I'm never looking for it to be perfect. Sometimes it's perfect. I use these levels as an area of, oh, it's close to this level, then all of a sudden this level is better. It is that simple, right? I've never hidden that. And looking at this, where is going to be your entry? Well, this fair value gap, right? Right here, this is our retracement into it. And let me actually make this a little more precise. There we go. And so you're entering here, and where's your stop loss? Well, I need 3 PD arrays, right? So I have my fair value gap, I have the order block above, and this inversion fair value gap, which brings my stop quite large and gives me 1.17 R to this target. See, the more I try and convince myself that this can be a trade, the less I like it. Because it's not mechanical. The way this trade works, okay, well, I put my stop here because I wanted to. And I didn't take profit here. I took profit here because it was cool. I don't know. I can't justify this. It is a move I can predict. It is a beautiful move that did it with a clear unicorn, but there was no SMT. It was against my bias. And if you did take that trade with the correct mechanical rules, it would have led to low risk to reward. So it is a trade. It is valuable. And it did reach enough return for it to be worth it. And once again, if it's too low and you still want to take that trade, you do the same thing we talked about earlier, right? My stop is going to go break even. I did not take profit. Let me just mark it out. So my stop went break even. I did not take profit here. I waited until 2R and right here, and then I took profits, and then I got broken even on the rest. But even then, it's a harder trade to take than this one, which I am going to bring back on the chart. You know, we got to get these thumbnails in. But even this trade, where same logic, right? Because, oh, too small R. It's not enough return for my trade. So what am I going to do? I'm going to break even my trade and let it run. If it doesn't run, it's a break even. No harm, no foul. And if not, well, I missed out on 0. What is that? 56 or something? Something like that return. So I'm not happy at all, even if I get it. It's not a return that makes me profitable. And then you had the opportunity for more. Definitely see what you mean. I only saw this move at 9:50 to 10 a.m. or so. Not much time law. Yeah, no, for sure, right? Once you're already here at those 9:50s, personally, I would have loved to long this morning. But once again, it's just the fact that there is no SMT. And if there was no SMT and there wasn't any news at 10 a.m., I'm longing this any day of the week. But once again, it's two things. I can't trade before the news unless there's SMT. And why is that? Well, to be honest, on prop firm capital, I really don't care. That's the truth. I really don't mind. I'll trade randomly. Well, I used to, at least. But the truth is, if I'm on a live account and I have a news event at like 10 a.m., what if it is the worst ever thing that could happen and all of a sudden there's a war and now I took the trade before and I can't exit it? If I take it after the news, I can wait for the result of it. So big fundamental events don't blow my account that has all my 100% life funds in it. It is really, once again, just a psychology and risk management rule, right? Not all my rules are based on getting the most return for your trade. Most of them are based on consistency and safety, because those markets are created for gamblers. The reason why you can trade these things is not so you can make money. So it can be publicly available and so they can make money. So being able to go past that and actually succeed in these markets, you need to be very strict with yourself. At least that's my personal opinion. That's what's worked for me. Different things work for different people, but personally, that's why I don't like trading before news. I used to allow myself in prop capital because it wasn't real, so I didn't care if I lost the account because I could just buy another. But now I don't do this anymore because I don't like that rotation of accounts. Live account is A+ only. Not necessarily. See, as I said, if there's no news here, even though there's no SMT, I'm taking that on my live account. Because my edge is there for A and A plus setups, which means there can be one thing missing. And one thing missing cannot be anything, right? There can't be a breaker block missing, for example. But there's no SMT, or we're far away from our higher time frame point of interest, or there's not so much of a clear daily manipulation. That's still a trade that is worthy for me to take, so I'm going to take it. But add another variable that is wrong or missing, and all of a sudden, it is not worth my time. Does that make sense for us? And now you do you, right? You trade in the way you want to trade. You trade what you want to trade. Of course, you guys know from the disclaimer, this is not financial advice. But personally, when I trade my live accounts, I don't like to limit myself to only perfection, because the truth is, there is no difference in perfection or not. And this is something I backtested. So I looked at perfect A plus setups, and then I looked at A setups, which is just my way of saying there was one thing missing. I backtested them and ranked them like this, and then I looked at the return for both, and they were very similar, and the win rate was very similar. Which told me what? Well, if everything's there, it's good, but if there's one thing missing, it's also good. Which is that simple. But the thing that's missing is not always the same, so I can't remove one of my rules, because it's not always the same thing that's missing. Like if there's SMT or there's no SMT, it's just as good, then I remove the SMT rule. But then sometimes the manipulation of the day would be unclear, but there was SMT, so the trade was still valid and it was a win, right? I don't know if you guys get what I'm saying, but this was my thought process when I was actually creating this model. I just wanted to be able to have one set of rules that could match the most amount of trades. And that's what led to the Rice trading model. We can consider additional trades in the day, but once again, right? At this point in time, if I haven't placed a trade yet, I see 2 moves that I missed. That's it. That was the day. And then you might say, oh, well, look, there's a unicorn here that could have given you a great trade. Yes. But if you're all the way here still looking for trades, it means you probably have 2 or 3 losses along the way. It's that simple. And then we can look for PM trades, which there was maybe a PM opportunity. I'm looking here, 12:30. We actually had no lunch raid. So if there's not a lunch raid, I'm looking for 2 p.m., right? These are the only trades I look at the PM session. I'm looking at 2 p.m. power of 3, so 4-hour, basically a fractal of AMD, accumulation, manipulation, distribution. Or I'm looking at a lunch rate, which in this case we did not have because we waited all the way here until 4:36. And if we look right here, 2 p.m., yeah, you have a clear open low, taking out liquidity. Once again, no SMT just ruins everything, right? Yeah, no SMT. But if I'm looking at this, there doesn't seem to be anything else missing. You have a breaker block that formed right here and a retracement into it. So we could consider a PM trade, but again, AM session, missed moves. The price already ran almost 400 handles. Why the fuck are you looking for a PM trade? You should be focusing on, okay, well, why did I miss the morning moves? The highest probability time window. Not what can I trade in the PM session. Once again, that's just my opinion. And if you trade my model, well, you see it right there. It's profitable. But why are you still in front of your charts? Why didn't you make your money in the morning and go do something else with your day? But just to say it again, Rise Model PM session, profitable trade. And I'm telling you guys not to trade the winning trade. That tells you I want the best thing for you. All right? Are you only considering SMT with ES and not YM? Yes, I am. So for me, SMT, I only look at NASDAQ and ES because they are heavily correlated. YM is not heavily correlated with NASDAQ and ES. It is correlated. Why? Because it has a lot of overlapping stocks. But it is not, as I said, up to the threshold I need. I actually ran data for SMT, so to understand the correlation between both assets so that I can know which SMT is going to be the strongest. That's actually something I wanted to add to Rice Statistics, but I didn't think people would enjoy it. Truth is, the most useful data is oftentimes the most boring. And when you're trying to also sell a tool at the same time that people will use and it will help them, sure, but that they'll also enjoy using, you don't place priority on the boring stuff. Correlation coefficient, right? Being able to compare to different assets. And I actually just thought of something. You guys gave me an idea. I'm going to take a note of this. So sorry if you hear some scrambling. There we go. Empty piece of paper. I'm going to add. You guys are getting the first hand at how my brain works. I get random ideas. I note them down. I have about 50 papers laying around. Add correlation coefficient. Correlation coefficient. And by the way, guys, it is best to write notes by hand because your brain remembers them better if you write them by hand rather than just taking my phone, typing something out. Add correlation coefficient to seasonality analysis. So that way, when you're looking at your seasonal chart for my Rice Statistics users out here, and you can compare multiple instruments together, you'll also be able to see how correlated together they are. And I'll add some explanation in the help section. And of course, I'm going to be starting some more concrete content on YouTube about Rice Statistics very soon, in February, actually. So you guys will have a lot of stuff to use there, and I'll explain everything in detail. But this is a very cool thing. Has like zero correlation half the time, does whatever it wants. Fair enough, fair enough. But when you're looking at correlation, you're focused more, right? It depends on the time frame, of course, right? Because sometimes 15-minute NASDAQ and ES are awesome, but maybe sometimes 15-minute NASDAQ and YM will be better. But if you want an all-in-one, like if I always use this one, it will always be right, just use ES. I haven't opened a YM chart in so long during my trading. I opened it at one point to look at some stuff I was studying, but I never look at SMT outside of NASDAQ and ES. I'm a specialist. That's how I like to be. Some people like to trade different assets. I like to focus on my assets that I'm comfortable with. Perhaps later in my trading career, I'll expand to more assets. By the way, do you guys have any other questions in relation to price, right? Pretty straightforward trending day, right? Not much to say about the New York AM session, except either you shorted very early or you could long at almost any point. Remember when I backtested YM and y'all were like, what the fuck, Wolfe, is this? Yeah. Wolfe dared show up in class with a backtest of YM. That was, yeah, embarrassing, brother. But I forgive you now. It went to get me personally. It really hurt. Yeah. I wasn't laughing at the time, but fair enough. I don't see anyone asking any questions, guessing it was all clear. And I hate saying this, but all clear as always. I feel cocky when I say this, but I am arrogant, so what can I say? All right, no questions. You better, Wolfe. You better. I appreciate you guys once again showing up here. I really do like it. I hope this brings you guys a lot of value. I hope this helps you. And as always, you guys know I'm here. I'm here to help if ever I can. Never be scared to tag me anywhere in chat and stuff. All right? You guys have a great rest of your day. Good luck trading tomorrow. We'll have 4 price action reviews this week, so we'll see each other again. Have a good one, guys. You too. You too, Alex. Good night, guys.